If you trade every trendline break, you're setting yourself up for failure. You ever been put in a situation like this? You're thinking, yep, we're going short positions, baby. We got a break of a trendline, and then boom. Price snaps against you, fakes you out, you're presented with a loss, and you're discouraged, you're frustrated, you don't know what to do. How do you stop getting faked out? Let's be honest, that is the ultimate, most frustrating thing that could possibly happen when you get into a trade is being faked out. This video is going to change how you look at fakeouts, because while you cannot avoid them entirely, what you can do, dramatically reduce how often they catch you off guard. And I'm going to show you exactly how. First of all, what is a fake out? I mean, to be honest, by this point, you guys should probably already know. If you've made it to this video, I'm sure you already know what a fake out is. But let's just be very certain. This is a beautiful scenario here in gold of a fake out. Price looked like it was rolling over, looked like we were finally going to get a reversal, get some retracement, and psych. Nope. You thought short positions here. I'm sure you and everyone else and their mama thought short positions here, immediately went against you and took off aggressively in the opposite direction. This is a beautiful scenario of a fake out, but it is essentially just a failed breakout. That's what a fake out is. There's a lot of reasons why fake outs happen, but the key is to stop seeing fake outs as a mistake and start seeing them as normal behavior. That right there will give you an edge. If you can just be prepared for a fake out every time, it's not going to catch you off guard. You're going to know exactly what to do. The markets are manipulated. If you can think of the price as the markets of being this carnival game, it's not meant to help you succeed. It's not meant for everybody to win. It's not easy. It truly is like a carnival game. You're working with probabilities. You've got to know how to rig the system or rig the markets, or you've got to know how to play the game, essentially. So if you can get into a position already off the bat, anticipating a fake out, you're already going to be a little bit ahead. Now, why do fake outs happen? There's a lot of different reasons. It could be a news event. It could be volatility. It could be liquidity grabs. I know you guys love hearing that. So if you can just be aware that fake outs will happen and they happen often, and maybe not exactly particularly why they happen, but if you can understand that they do happen and stop blaming yourself and start building better filters, you're going to start seeing a massive change in your results, in your trading. So let's get into it. How do I filter high quality breaks? What tools can I put into place to help me avoid some of these fake outs or get faked out less often? So here are some added confirmations or some tools that I've got in my toolbox to help me before entering a trendline break, to prepare myself in case this is a fake out. So the first thing is a break and retest. So before entering a trade, if I am skeptical that this may possibly be a fake out, simply waiting for the price to break and then retest that line could be the very first filter that we can add to help us avoid some of these fake outs, or to help us stop being faked out so often, is simply just waiting for the break to happen and then waiting for price to touch the trend line from the other side and retest it. That could be the very first thing. You could start just implementing something as simple as that, and that right there alone in itself will help you avoid fake outs. Now the next thing is waiting for the candle to close. This one is the easiest to do, especially in the lower time frames. If the price continues to break your trend line or your level, and you can get the candle to close and still be on the other side of that break, then you're much less likely to be in a fake out, because more than likely it would have continued in the opposite direction. It would have already faked you out. So if you can wait for the candle to close and still be on the other side of that break, then you are more than likely in the move and not caught up in the break. So no jumping in on wicks. You need to get a full-bodied candle to close through that level, past that break. This tells me that the break is much more intentional and we didn't just get wicked out or faked out here. And the next is confluences. Now this part's going to be dependent on your strategy and your system, but the added confluences that I like to incorporate before entering is how much data is behind this trend line. Has this trend line been respected for a higher amount of time? Is this trend line drawn on a higher time frame? Is this move supported by a 1 hour chart or a 1 hour trend line versus a trend line drawn on the 4 hour time frame? Or is this trend line been drawn on a monthly or a weekly? How much weight does this trend line hold, or how much weight does this break hold? Now the next thing could be, if you're a day trader, it could be the time of day that you're trading. Are you trading during lunch hours? Are you more than likely about to be tossed into consolidation and faked out in either direction? So making sure that you're trading during more volatile hours instead of consolidation, or where price is moving sideways through your lines where it could very well just break it and then come right back up. So just making sure that you've got some added confirmations or confluences to help you feel more confident about this position or about this break that's going to happen. It could be key levels, it could be support and resistance, resistance, waiting for your trend lines to be broken, how much data is behind the trend lines, do they hold much weight, are they drawn on higher time frames, what time of the day is it? So just making sure that you put all of these things into place before jumping in on that break, that alone in itself can help. So it's just added confluences, making sure that all the stars align, all of these things are playing a role before entering this position. So the confluences part is going to be a little bit more vague and subjective depending on the strategy that you trade. And then the last thing is going to be double confirmation. Double. So not only do we need a break of a trend line, but we also need a break of support and resistance, or support or resistance, whichever one. And that's showing us that we're no longer consolidating. We have been able to break out of this consolidation, out of these highs that it hasn't been able to break out of, or these lows. So we get double confirmation here, allowing price to not only break through a trend line, but also break through an area of support and resistance. So these are 4 things here that can help filter out some of the fake outs. You can incorporate all of these, you can incorporate some of these, but I can guarantee if you incorporate any of these, the odds will be much more in your favor of avoiding fake outs than getting caught in every single one, taking every single break. Now, even with all of these tools, fake outs are still going to happen, believe it or not. Even with all of these tools in our toolbox to help us avoid them, they're still going to happen. Now, when they do, how do I respond? When I'm caught in a fake out, even though I've used these tools in my toolbox, how do I respond and how do I react? I can tell you what I don't do. I don't revenge trade. What I do is I will log this trade. I'll make sure that it is journaled in my TradeZella. Plug, if you don't know what TradeZella is. It is a platform that allows you to track and journal your trades to see what these fake outs have in common. To see, I put these tools into place and I still was presented with a fake out, but when I add this tool, I'm less likely to be caught in a fake out. So it's a great place for you to help analyze and track your stats and your data and your setups and your tools in your toolbox to help you avoid these fake outs. If you've never used TradeZella before, I have a code that is Tori10 for 10% off of the monthly, or if you're looking to go all in for the year, if you use code Tori20, it'll give you 20% off for the entire year subscription. But what I do is I will simply log that trade, I will journal it, I will note what failed, why it didn't work, and then move on. We're on to the next trade. So since my risk was already predetermined and preset before I even entered this trade, the damage was limited. This loss was considered a fee. It was small. It was mitigated. And sometimes fake outs create new opportunities. Now it is showing you that we're actually gathering momentum and going in the opposite direction. So if you can remove some of the resentment also towards the fake out, it will allow you to move on and take the next setup, which very well could be in the opposite direction. So it's truly just about remaining neutral. So let's recap here. Are fake outs avoidable? No, they're not. You cannot avoid fake outs entirely. It's just not possible. But now, can you reduce how often they affect you? And the answer is yes, absolutely. Use filters, wait for confirmation, and accept that sometimes the markets are just playing games with you. Your job is not to avoid every loss. It's actually to avoid the avoidable ones. If you found any of these confirmations helpful to help filter out with fake outs, drop it in the comments below. Don't forget to like and subscribe if you guys found this video helpful. If there are any confirmations or confluences that I didn't add that you guys use, drop them in the comments below. Thanks guys, I'll see you in the next video.